Hey everybody, it is Monday night. Taking a look at the S&P 500 as we get ready to trade Tuesday, January 14th, Tuesday of January week 3. So we're in OPEX, monthly OPEX week. I wanted to start off with a cleared out version of the S&P 500 chart with this bull fork on it, the one that I kind of brought out and have been pointing to and talking about a little bit since the start of the year, but I haven't bothered explaining it to everybody, what the points were on it and why it might matter. But I thought this would be a good time to do that, especially since it's really becoming clear that we're purposefully making closes above the median line of this bull fork. So let's talk about it. The thing with the bull fork or with a bear fork is you need three distinct points to plot the anchors on them. It's just a software, a tool that you can use in Thinkorswim, but these are used in lots of other broker programs as well. So if you have one that has this will sort of give you an idea of how to utilize it. But the one in Thinkorswim, you pick out 3 points in the security that you're trying to plot the fork on. And for this, we use the December 26th, 2018 low, this massive low that we made into the day after Christmas on the S&P 500 in 2018, and then our second plot point is the July all-time high that we made at the end of July of 2019, and then we sold off. We had that nasty sell-off over the whole tariff war really coming to a head throughout the month of August. And then the third plot point is our October low, which was our sort of our last stop before taking off into this leg that we're in now. And you can see that we traded from that low in October, we traded between the median line and the bottom of the fork. And then here at the end of December, we started taking a little peek above it. And now as we are here into January, we've made 3 closes in a row, distinctively above the median line of this fork. So what that means is that if there is any kind of, thing that's going to come into this market and make it juice ahead even more so, such as earnings out of the banks, leading into earnings out of Netflix, leading into earnings out of Amazon and Apple, and so on and so forth. And if those are way better than expected, maybe what we're going to be doing is trading in here in the upper section of the fork, whereas we had been trading in the lower section of the fork. And until we see a close below the median line of this fork, that looks like what the game plan is. So that's one point I wanted to get across tonight. The other one is this idea that we're going to maybe gravitate up towards breakout move up into this bull fork that sort of tops out at 33.30, and then maybe we come back down and test this median line, hold that, and continue just sort of grinding along. But let's talk about what would happen if we just got to about that. And that would be, maybe if the earnings out of JP Morgan are good, but the earnings out of Goldman Sachs a couple days down the line on Thursday, I think those are coming out Wednesday or Thursday. What if those aren't good enough and they spook the market? And then what if Netflix spooks the market again like it did last quarter? So that would be the idea as to why we might top out soon and pull back, because we just don't have the earnings to prove why we're up so high. Okay, well, in the first place, I've been pointing towards 33.28 to 33.30 in the targets list that I've been giving you guys because these just mark points on that July all-time high where we crapped out at in July that I just showed you, and it's one of the plot points on this bull fork. And then just above that at 33.30, that's a perfect 10% gain on that 30.28 level. And then I started going through a list tonight of what it would take if we were to start rolling back off of 33.30, and some really good, percentages really rhymed in here. If we got to 33.30, 32.72 would be the halfway back for 2020 range. And we know that this week we have been fighting against this 32.72 to 32.74 area, because that's where we made our all-time closing high last week, and then we've been making new highs but have been failing to make the closing high above it. And then today we finally took that out. Well, if that was a launch point for us today, and if we get the good news out of JP Morgan and Goldman Sachs and so on and so forth, and we don't sell the news on the China trade war, as soon as it gets signed on Wednesday, then maybe we're looking at a doubling up from that area, and that would be an excuse to get us to 33.30. Okay, so if we were to roll back off of 30% off of that would get us to about 32.46, and 32.47.93 was the high for the year 2019. So if we took a simple 2.5% correction off of 33.30, we would be testing the high for 2019, reversing off of that. The 20-day simple moving average is rising up into there. Right now, it's going to be between 32.35 and over the next couple days going up to about 32.40. But if this move were to drag out towards the end of the week and we started correcting, the 20-day simple moving average would be tucked in right in there in this neighborhood as well. Okay, if we were to come down 3% off of that 33.30 high, that would get us to about 32.30. And 32.30.78 was the 2019 close. So you could see topping out at 33.30 and then coming down and back testing the closing level for 2019. 32.14.64 is the current 2020 low. So if we were to look that would be just a little over 3% and reversed off of that. Great, but if we keep on going, minus 4.5% would get us to 31.80 handle. And ES traded down to 31.81 last week during the missile, I will call it the missile crisis, which is really not a funny thing to say. But in any case, that missile attack that Iran shot back at us with last week that drove the futures down to 31.81. So that would be your 4.5%. And that's key because a lot of times if the market goes the full distance of 5%, pullback, there are so many stops sitting at 5% off of a major high that it usually just busts on down through. So the market often turns on a dime just before it hits that 5% mark. And so that would be that 31.80 handle, and that rhymes very well with back testing 31.81 on ES. And the 50-day simple moving average is coming up quick just below that at 31.60 to 65. So you can see this would also be our 80 handle rule as well. Okay, if we were to overshoot 5% and go all the way down to 7.5%, that would get us down to the 30.80 handle. That would be a 10-point hold above the December low, and our 100-day simple moving average would be just below that. And so yet another set of the 80 handle rule playing out as well with your 30.80 to 30.63. And then finally a full 9% off. Same concept as why we would maybe only go to 4.5% down, because when you get to 10%, there's a whole bunch of stops sitting there. So the market often turns on a dime before it makes that full 10% move, because otherwise it usually falls right through the 10% mark. Okay, so 9% off would get us to the 30.30 handle, and ultimately 30.28 is our point A from where we started from in the first place. Okay, so that gives you some rhyme and reason to why and how we might top out at 30.30, how we could even get there in the first place. And of course, if we blow right on up through this, then everything I just spent was to pot anyway. But it just sort of, gives you some sort of material for which to understand and justify why we could get to 33.30, because there are a lot of really make a lot of sense for us to pull back to. Okay, that's it. Have a good rest of your evening. See you in the morning. Oh, and by the way, ES change for a high. So unless this is another one of those things like what happened overnight ahead of the non-farm payrolls, if we're jacking up, ES tonight and we're going to come in and get a disappointment out of JP Morgan, it would be sort of the same exact setup that we got with the non-farm payrolls. Okay, that disappointment in the morning, if that number comes out and isn't as good as what the market wants it to be, it would be a similar setup, and maybe we would get a little pullback tomorrow, recover, and then still go after this 33.30, because I think that as long as we hold out above this median line of this bull fork on a closing basis, we're going to keep on heading higher. I hope this all made sense. I didn't jump around too much. Have a good rest of your night.